David. I want to thank you for joining me on this week's Currency Countdown. How are you?
I'm doing well, Tracy. Always a pleasure. Thanks.
Well, I just wanted to start this week off by discussing what's happening with the euro.
The title of the show, Currency Countdown, is very apropos because all these currencies, in my view, are destined to the dustbin of history. What we're looking at here is what would you do to solve the problem? And the real solution, in my view, would be, as we discussed last week, to separate the type of debt that is entailed in the Eurozone, similar to what I talked about in the United States. What you got to look at is what debt is gambling debt, debt that was nothing more than a derivative on top of a derivative, these arcane bets from financial institutions that have nothing of substance behind them. In other words, the derivative is just pulled out of thin air, versus real debt that has substance behind it, such as a mortgage, which has a building behind it, or a farm loan that has a field of wheat behind it, or some type of energy loan that has a structure behind it, or some type of commodity behind it that's really viable. Any commercial banking activity, for the most part, in general terms, has something real behind it. Excuse me. Therefore, that debt should probably be saved with these bailouts. All these other gambling debts done primarily by the investment banks throughout the Eurozone should really be wiped off the books. The only way to get back to reality is to be real. Look at the books, find out what's real, what's backed by securitized by something physically in the economy that's viable to the economy working, and get rid of the rest. Well, what would happen? A lot of crying, moaning, and whining would happen. Because, for example, as we talked about last time, France has a great deal of sovereign debt. They bought a lot of these Greek bonds. They bought Italy's bonds because countries can't go bankrupt. Well, yes, they can, because the people are what's backing the debt. And if you tax the people at 100% and still can't make the interest payment on the debt, you're broke. That's nearly the situation. It's in part of the Eurozone. So we're in a very dire situation. But again, no one's really addressing very few are addressing the problem, and very few are coming up with any thoughtful responses to the crisis.
Well, I'm going to call us the currency police, and I want to ask you this question from another perspective. Let me get this straight. So we have a bunch of European leaders who are currently dealing with massive levels of debt. They're trying to bail themselves out with the euro, and for some reason, they're working at extending credit lines to the IMF of over $150 billion.
Well, Tracy, you owe me $10,000, so I give my uncle $8,000 to loan to you so you can pay me back part of what you owe me. I mean, it's so convoluted and so ridiculous. It bears on absurdity. And yet, they publish this in the public domain, and, people decide temporarily perhaps that things are going to be resolved, but again, they're not. And again, no one's really coming up with some kind of a solution that will work. And that's the problem. So as we continue down this road of making excuses and papering over a situation that's dire indeed, I think you're going to see more and more problems. And you'll also see the precious metals come to the fore at some point. Obviously, it's not on a daily basis, but as this thing doesn't work itself out, you'll see the precious metals strengthen. If I'm wrong, and this solution, quote unquote, does work for some time, then obviously, you're going to have to adjust your investments maybe on a short-term basis. Long-term, I just don't see any way out.
Let's talk about how the U.S. dollar has been gaining some gradual strength. Right now, based on the credit of many of the European countries, the U.S. dollar is starting to look attractive. And in that, we have a large election happening in the next 11 months. Can you talk to me about the impact of the presidential election and, how that's going to impact the U.S. dollar?
Well, everything in the fiat currency realm is perception, really. It's perceiving that one currency is stronger than another. One country or a group of countries has the better ability to pay back what they owe than somebody else, and this fluctuates almost daily now. So right now, the dollar looks pretty good against the euro, and I'd have to say, on a relative basis, it probably does. Going to the election, it's going to depend on who wins and what the perception of that new leader or or if Obama is reelected to another term, the perception that the markets have on that quote unquote leadership. The basic crux of the issue is that are we able to start whittling away at our overall current deficit and long-term obligations? And the answer right now is there is no political will on either party to do so. So that's the bottom line.
I have been following how different governments are actually investing in the resource sector. I don't know if this has any interest to you or if you've been watching that yourself, David. I've seen a substantial increase in news coverage.
Well, I agree, Tracy. There has been. It is of interest to me. I try to cover the resource sector from top down, and that is really wealth. Basically, there's only two ways to get wealth. One is you got to grow it, or two, you've got to mine it somehow. And I'll throw oil into that because you drill for it. So everything actually starts from the basis of the land. It's either growing on the land or in the land or under the land, or it's growing on top of the land. And because of that fundamental, simple idea, which is a fact, you really have to look at how are you going to manage those resources and how are you taking care of them and that type of thing. And what countries are doing it the most efficiently, doing it the best, and doing it with the least interference. For example, in some jurisdictions, it's nearly impossible to do any drilling for oil, as an example, or to do any mining in certain areas, or do any logging in certain areas. And now, look, I want to be clear with our listeners that I am very profoundly interested in good stewardship. I really believe that if you're going to mine, if you're going to harvest, whatever you're going to do, you need to do it in an ethical, sustainable manner. Nonetheless, if we didn't do any of it, we'd all starve to death. There wouldn't be anything to eat. There wouldn't be anything to drive. There wouldn't be any society. So we have to strike a balance here. And I think that's what we need to strive for. And I think that's where we should look for leadership in the sector, is what nation states, what entities, or on an individual basis, what mining concern or, let's say, farming concern does it on an ethical, balanced basis in a sustainable way.
So today, what do I invest in today and for this week? Can you give me a short-term investment recommendation and maybe a long-term? And I suspect long-term right now is 1 year.
Okay. I would say on a short-term basis, what you want to do, since there's a few days less for tax loss selling in Canada and a few more than that in the United States, to take a look at your portfolio and look it over. And if you aren't just absolutely convinced that certain resource stocks that you own are going to do better than anything else you can think of, I would get rid of them. And I would go back and buy, if you have that one and you want it, in the U.S., I think it's 31 days you can rebuy it. In Canada, I don't know the rule. However, you really want to buy the best of the best. So I think that's one. Second one would be for long term. For a year out, I think looking even at just gold or silver or both, I think you're probably going to see silver pretty close to double from wherever it bottoms. And I think gold will probably go up probably 50 to 70% over the next year. My concern right now is picking a bottom. I don't know no one does when exactly it'll take place. I do think we might see a washout in January, perhaps February of 2012, which will be one heck of a buying opportunity. Again, since no one really knows, I think you should just take a balanced approach and start buying in. If you're not in, or if you want to add, go ahead and start buying into the next few months.
Okay, well, I'll tell you, you've given us several exciting points here to savor from this week's interview. David, thank you so much for joining us.
Thank you, Tracy.